Hey, what's up guys, welcome back to the channel. In today's video, we're going to be looking at the fundamentals and the chart of Coinbase stock to understand why I believe this is one of the best long-term software investment opportunities right now. Now, this video is going to be the third addition to the brand new StockDives series on this channel, where I provide simplified analysis and price predictions for companies that I'm in the process of actively researching to potentially add to my own investment portfolio. And in this video, I'll be going over the company that is by far the largest crypto exchange in the United States. We'll go over the reasons why the shares have tanked so much since the direct listing, their financials, and also do some price predictions. And at the end, we'll also take a look at their chart to see where exactly the shares could be headed in the short term. So before we get into it, guys, make sure to drop a thumbs up and hit that subscribe button if you haven't already. Now, as we all know, Coinbase actually went public through a direct listing in April of this year, which is slightly different from the traditional IPO method a lot of other companies tend to use. And this has actually ended up to be a very confusing topic for a lot of retail investors, which is why I'm going to be explaining a little bit about what exactly is the difference between the two methods. So in an IPO, or an initial public offering, essentially what companies are doing is they're working with banks to issue new shares of stock that'll be sold to the public market. And this is exactly how the company raises money from the public shareholders. Because given the involvement of investment banks and fees, this process tends to take quite a long time, but it does end up raising quite a lot of money for the shareholders of the company and the company itself. However, in a direct public offering or a direct listing, the company isn't actually working with any banks to issue brand new shares. Instead, what they're doing is they're simply converting the existing shares that were in the private company into public shares. Now, this process is quicker and cheaper and tends to definitely make sense for companies that aren't in an urgent need to raise cash. Spotify and Palantir are actually major examples of companies that recently did a direct listing. And as you can see so far at least, their shares have been performing really well. If you look at the charts of both of these companies right after their direct listing, you can see a pattern of really high volatility to the downside, followed by a sideways pattern before the shares begin their real trending move. Now, what do I mean by a real trending move? A trending move is essentially when the shares are moving with high volume in one direction or the other. In this case of Spotify, you can see this really started happening after the pandemic crash of 2020, which is when real revenue started coming in for the company, and Wall Street started to realize that this company actually has some serious potential. In the cases of both Palantir and Spotify, these trending moves obviously happen to be on the upside, as the market developed a pretty strong conviction on these companies based on their fundamentals. However, as you can see, the Coinbase listing had a much rougher ride, where shares got bid up all the way to around that mid 400 region before collapsing all the way down to this low 200 region, which is the range that we're stuck in right now. But in my opinion, there are some pretty simple reasons for why this kind of move could have been expected and should not be of a major concern for long-term shareholders. You see, direct listings are best known to be used by companies that typically want to accelerate their time to market that don't necessarily need the money right away. It's a completely non-dilutive way of essentially allowing the insiders of the company to convert their shares to cash, which obviously is a completely normal thing to do, especially in the big IPOs that we've seen over the past year or so. The only difference is that in a direct listing, the insiders don't have to wait 6 months or so to actually sell their shares. Instead, they can sell their shares directly after the stock is directly listed onto the market. And in this case, that's exactly what happened with Coin. Some of the major private investors in the company ended up selling some stakes of the position to obviously manage their own risk, which again is completely normal when a public offering takes place like this. And it definitely does not mean that they're losing faith in the company or anything like that. The other important factor for why Coinbase stock tanked so much is because coincidentally, they directly listed on the same day that the price of Bitcoin peaked. As you can see here, I have the Bitcoin price chart and the Coinbase price chart charted side to side on the same time frame. And as you can see, the Coinbase direct listing took place on April 14th. And if we look at the Bitcoin price chart on the daily time frame, the peak for Bitcoin, which is around that $64,900 level, ended up being on the same exact date, which is also April 14th. Now, I don't know if this is a coincidence, if this happened on purpose, or if this is the reason why Coinbase decided to direct list at this specific time, but I do think that this created a little bit of excess hype for the company, and the immediate decline in the share price of Bitcoin ended up being a factor as to why share price of Coinbase also ended up tanking. What I'm assuming ended up happening is that a lot of fear ended up getting created in the crypto space because of the Bitcoin sell-off, as people that were trading on margin or people that bought into the hype based off Tesla or all these other pumpers on Twitter, etc., ended up panic selling. And you have algos and short sellers and market makers that essentially bid the prices of the stock down. And that's unfortunately exactly what happened with Coinbase here. You can see we saw a lot of heavy volume on the downside. We saw some nice bounces, but again, none of these bounces were really sustained because as you can see, the price of Bitcoin throughout May ended up tanking even more. But luckily for us shareholders, you can see that the movement in Bitcoin is not actually one-on-one correlated with the movement in Coinbase, because at the end of the day, Coinbase is not a Bitcoin sympathy. It's a part of the Bitcoin ecosystem. Obviously, if Bitcoin goes up, there is going to be an inflow in the amount of revenue that Coinbase generates. But again, Coinbase has an expanded revenue streams. They have a lot of different products that they're not only selling to the retail market, which is essentially the type of people that are actually selling here, but also to the institutional market, which I'm assuming, in my opinion, are the people who are actually buying Bitcoin right now. An interesting thing to note here is that at the $250 reference price for the direct listing of Coinbase, the company was technically valued at roughly $65.3 billion. But obviously, it ended up opening around $380 and spiked all the way up to $430, which put its valuation at around $90 billion for a period of time. As of last week's close, Coinbase is actually now trading at a $50 billion market cap, which is almost half of what the private equity market valued it at just earlier this year. So I hope that puts into perspective just how undervalued coin is and why the sell-off in the share price really isn't anything to panic about. Now, if we have a look at the financials of Coinbase, we can see that the growth in both the top line and the bottom line of this company has just been extremely fantastic over the past year. Their profit margins are sitting at around 42% as of Q1 of this year, which means that not only did their customer value and volume grow, but their operating expenses also came down relative to the growth in the top line, which obviously is a great sign in the right direction. On top of that, very surprisingly for me, the highest growth in this company's platform has actually been through institutions such as banks, hedge funds, and asset managers, which in my opinion is a really great sign of the wider acceptance of cryptocurrency in general. This is exactly what a startup platform like Coinbase needs, because institutional customers are very sticky and they're much more likely to stay with the platform and provide much more revenue than retail investors, who obviously tend to be emotional, and they also tend to be on and off as the prices of crypto fluctuate. And we all know just how volatile crypto really is. If we look at the quarterly revenue growth year over year of Coinbase and compare it to some of the other companies in the space that are also in the software and high growth space, and we put that next to the forward price to earnings multiple, we can see that Coinbase absolutely destroys at its current price every other company or potential competitor in this space. Now, obviously, we all know Coinbase does not really have a direct competitor on the public markets right now, but companies like PayPal, Fastly, Snow, Palantir, and Etsy do give us a good idea of how a leader in a specific sector can behave and what kind of valuations such companies can trade at. And as you can see, Coinbase has seen the highest growth out of all of these companies at around 844% quarter over quarter. And on top of that, this company is actually trading at the cheapest valuation out of all these companies at only a $28 forward price to earnings ratio. So again, this only further solidifies the argument that Coinbase is actually at a really decent entry zone right now. So to wrap things up, let's have a quick look at the chart of Coinbase to get an idea of what the share price could be doing in the short term. So here I have the 2-hour chart on Coinbase with the RSI on the bottom. And as you can see, on Monday of last week, around June 28th, we had a really major move with a lot of volume on the bottom. As you can see, this move was accompanied by a lot of institutional participation, obviously because we had some pretty great news about the company. I personally added a lot to my position in Coinbase around that 224 zone a couple of weeks ago, but I did also wire quite a lot of money over that weekend to buy some more Coinbase on Monday and Tuesday. But unfortunately, as you can see, the share price ended up just skyrocketing for another 2 days, and I really could not get a decent entry price. And as you can see, the RSI was well above 80. So that was kind of my cue to kind of wait a little bit and wait for the price to pull back. And as always in the stock market, patience always pays. So now we've kind of pulled back from that 260 zone all the way to this 240 zone, which is another great entry area, definitely speaking in the long term. But if you are looking for a much more precise and much better risk to reward entry area, I would definitely look for around that 225 zone. If we get below 225, we are looking around that 215 to 210 area. Now, do I think that Coinbase can go below 200? I think it's very unlikely given the fact that we've built a lot of support around the 200 zone. You can see with these big wicks that we did form on these two candles, it just shows a lot of buying pressure and the fact that shorts just get squeezed to the ground around those areas. So technically speaking, I don't see Coinbase going under 200. And again, if it does, I'm going to buy the hell out of it because at the end of the day, this company is trading at around 40 billion around 200. So that would be very, very cheap compared to where the private valuation of the company is and compared to just how fast this company really is growing. As for my price targets for the next 3 to 5 years as a long-term investment for Coinbase, here's a look at my bull case. I'm assuming a forward PE range of roughly $90 to $120, and obviously I'm also not assuming any possible dilution. These guys did announce a $1.25 billion convertible note offering earlier in May, so I do expect a little bit of dilution, potentially 2 to 3% over the next 3 to 5 years. But again, if you account that, that should not make a huge difference in your investment. This forward PE range results in a share price of roughly $771 to potentially all the way to $1,020 a share by 2025. But obviously, if the cryptocurrency boom continues and Bitcoin sees well over 100K by 2022 or 2023, I do think Coinbase could get even more inflated and the valuation could get even more rich for us shareholders. But as usual, guys, make sure to do your own due diligence on the stock. I generally think this is a great buying opportunity in a very, very high growth sector. I'm personally a big bull on cryptocurrency, and I do think that Coinbase is a great play on the cryptocurrency space and a great bet on the worldwide adoption of institutions for this cryptocurrency space and decentralization in general. But anyways, guys, that's all I have for you in this video. Make sure to let me know what you guys think about Coinbase stock. But anyways, guys, thanks for watching and I'll catch you guys in the next video. Take care.